Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Vinati Organics, whether it is a buy or not, it is in the chemical space, and what it has done so far. So let's understand about the company. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and any people and taking any share for the stock recommendation should do their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Vinati Organics, the company was established in 1989 and they produce basic organic chemicals, specialty chemicals as well as niche chemicals for different industries across the board here in India. Their major products include butyl phenols, specialty monomers and as well as aromatics which are used in dyes, pigments, paints and as well as fragrances, you could say different deodorants, etc. The market cap of the company is around 10,000 crores and the company is completely debt free. If we talk about the numbers, then the sales have been down 18% year on year, if, the December 20 numbers compared to last year, although the profits have been flat, but the stock is up over 180% from 2 years ago to 2.5 years ago. So it has nearly doubled, or in fact became four times since those levels. And the margins have continuously increased, and this is the biggest reason that although profits have remained flat due to higher expenses, other expenses, etc., more taxes, but the margins have continuously increased, and there is a very high promoter holding of around 74% and overall holding of around 90% with the major clients or major investors, whereas only 10% of the portfolio is with the retail players. So the reasons for the up move at the moment is increasing margins. Very few companies in the chemical sector are having margins which are increasing or is on the up move. Since 2015-16, when there have been China shutdown, things have really looked really bright for many chemical companies like Sudarshan Chemicals, etc., and many others. But over the last year and a half, margins have reduced in these companies, whereas for Vinati Organics, the margins have expanded. The China shutdown over the years, last 3 to 4 years, has also helped immensely, and what it has done that many of the companies from abroad, from Europe and US, are now taking raw material products from India, and that's why Indian companies or Indian centric companies which are making these chemical components are doing appreciably well and may continue to do well until the problems in China continue. And we have seen that happen, that with the problem of coronavirus and different types of diseases that are taking place in China, major reasons have been different, but pollution is also one of the reasons why a lot of diseases are cropping up in that region. So it doesn't seem like that the factories, especially chemical factories, would start doing their business again in the same manner as they were doing a decade back pretty soon. I don't think that will start pretty soon. I think that will still take a couple of years or so. So next 8 to 10 quarters could still be really good for organic companies or chemical companies. The critical chemicals that currently is being made by Vinati Organics is in high demand with the paint and aromatic business industry, whether it is fragrances or deodorants, etc. And that's where Vinati Organics is making a lot of profit. Apart from that, they are making chemicals for the food industry, and that is also helping gain traction on the bottom line for the company and on the sales front as well. The return on equity for Vinati Organics is 25%, which is extremely good in comparison to other chemical firms. And most of the firms are in the range between 17-18%, 20 to 23%, apart from one or two which are doing northwards of 30%. So having a return ratio of or an ROE of 25% is really strong, And I believe that for a company that is around 10,000 or 10,500 crore, to have such return ratios may augur well for the future, and that's why people are piling on to Vinati Organics at the moment. If we look at the technicals of the stock, there is strong support at around 950 rupee level. So the stock is around 1030 or so. The 200 DMA is nearby. So the stock is trading at 1035, 1040. The 200 DMA is around 1020. There's extremely strong support at around 950 levels, and big breakout might be expected once the stock crosses 1100, 1120 levels. So look out for these numbers, look out for these prices if you want to trade in the stock. But any dips towards 950 to 910 levels would be a magnificent buying opportunity, and may do really well. I mean, the stock would do really well once the numbers starts having more traction rather than having flat quarters. So any dips to 950 would be a huge buying opportunity, and stock has consolidated for the last 3 to 4 months. It is not that it is moving in one direction as other small cap or relatively mid cap companies are doing, but this has gone up till about September or so, September or early October, and since then it has been in range bound for the last 3 4 months. So it's better that you invest around those 980 to 950 levels, because this may see a breakout very soon. This is a good for a trading play as well. So normally companies of this sort, which would have run up twice, thrice, 2x, 3x times, might not be good for trading. But since it has already consolidated for the last 90 to 100 days, I think it is a very good stock to buy around 950, and probably have a 900 rupees stop loss and trade into it as well. So what needs to be done? Probably buy on major declines. As I explained, declines of 5 to 10% would be a very good buying opportunity. Market cap is extremely less for such a business. The kind of business that it is doing, the kind of chemicals that it is manufacturing, you could see a great spurt in both sales and profitability in the coming years. If you currently have, then hold an average on dips on the levels that I have already explained about. Whereas if you don't have, then wait for declines even further. Say even 4 to 6% declines would be good buying opportunity. What you can do is do an SIP over the next 6 to 8 months around these levels, and once it breaks out on any decline, so suppose it breaks out of 1100, 1150 range and goes to 1300, 1380, 1400, let it go. Once again, when it tries to consolidate and goes down by 10 15%, then again you get into the stock. So do not buy after a run up, but buy when the stock is consolidating, and you'll have a very good average price which would be very lower, and you'll always be in profit in this sort of a company until the China shutdown remains, and until Indian companies of chemical companies keeps exporting, they would continue to do well. So there is always a scare that China or the East Asian countries might start producing at the same level that they were doing a decade back, but up till now it doesn't seem like happening. So as long as the party continues, the stocks will continue to perform really well. Chemical sector will still perform as I explained until China shuts down the way it has been in this sector. Have less than 5% of your portfolio, so do not invest big into it, and do an SIP into the company. So this was my video on Vinati Organics. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. And kindly support me on Patreon. And those who have supported, thanks a lot for everything. Thank you.